Success in Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
And you are listening to the Financial Survival Network. This is Kerry Lutz, and you've heard a lot about the war on cash. Recently, we wrote about it over a year ago before anyone woke up to the fact. Just a little hat tip to ourselves. And it really does permeate every aspect of your life, especially your investment decisions, if you have any funds left to invest. But you've heard Jason Hartman on the show a number of times, back with us now, talking about specifically real estate and how it enables you to really avoid the effects of low to no interest rates or even negative interest rates, what they're calling financial repression, the war on cash. Jason, welcome back here.
Thank you, Kerry. And yes, there is a really a global war on cash. You know, the wonderful thing about cash is that it's really it's really a democratization issue, if you ask me, because cash is private. You know, if you can't spend privately, we know we can't make a private phone call or send a private email or send a private text anymore because everything is being monitored by Big Brother, unfortunately. But you know, as soon as they do this with the money supply, then we can't even spend privately. I mean, quite literally, I have heard funny stories about drug dealers and prostitutes, which, by the way, you know, maybe some of this stuff should just be legal anyway, so we can not be the highest per capita imprisonment rate of any country on the planet. That's quite amazing. The land of the free, right?
Really?
I guess not so much, but that's another discussion for another day. But you know, they're using Square, you know, the little iPhone or smartphone app where you swipe people's credit cards, and all these transactions are now non-cash. Not all of them, of course, but a lot of them are non-cash transactions. So, you know, the government can trace everything, and Sweden may become the first cashless country in the world because virtually no transactions are done with cash there. And I got to tell you, in my own life, I find myself using cash less and less, where I'll go to the coffee shop and buy a cup of coffee for $2 and pay with a credit card regularly. I mean, cash is sort of inconvenient.
Well,
you know, but it used to be in the olden days that credit cards weren't used for much at all. Now they're just used for everything. I have friends that don't carry any cash.
And that's what they count on when you get down to it here, Jason, right? Yeah. They want you to do that. They're counting on it. And the other thing they're doing is, and this is what the crux of my story was, that they were effectively not replacing worn bills, or actually their notes, their Federal Reserve notes. A note is in evidence.
Good distinction. Distinction.
Evidence of indebtedness. You know that. I know it, but probably many of you out there don't know it.
A good distinction that I bet most of your listeners didn't need. They already knew it, but yeah.
There's a few
but
of you
in the general public, you do need to make that distinction. Yeah. Your listeners are a little smarter than that, for sure.
They've been listening to you and me. They know it. Yeah. And they haven't been replacing them. And you go to an ATM, you get a stack of these notes, and they look like they're fit for the garbage. They should be burned, basically, or shredded. And led me to question, Jason, over a year ago, why are they doing it? And then I had some friends that were in the private ATM business, and they had to sell their business because they couldn't get decent bills. And their ATMs were constantly getting jammed.
They clog up. Oh, yeah. Wow.
And they said, we can't be in this business anymore. They sold out. And it was a highly profitable business, talking IRRs, mid-20s to 30% after you pay off the cost of your ATM. You finance it. It's just a wonderful business.
That is pretty good, I will say. But if you talk to a smart real estate investor, those returns are about what they're used to or better.
Yeah, you know, but as a business,
right,
where your fixed costs are low and literally your business is money, it's a pretty good business, Jason. And
fair enough.
And the banks were actually calling them to find out if they had money. It was just insane. And finally, they said, we just got to sell this. And they sold it to somebody else who evidently had better access. But they couldn't get clean, fresh money.
Well, that's what the government's doing. They're gonna make ATMs obsolete ultimately, and if we become a cashless society, then everything will be traced, and we will lose one more major aspect of our privacy: cash.
You got it, and you're spot on. You are right on the money, as we once would have said, but we're not going to be able to say that much longer.
Pardon the pun. Yeah. I'm right
pun intended.
On the electronic credit card swipe.
Yeah. And then I started thinking, well, why do people rob people at gunpoint? Muggings, and you know what, Jason? They do it usually to get items of value, jewelry, and cash.
Yeah.
And less people carrying cash.
That's an interesting point you make. See, the FBI and the various law enforcement agencies, every time the FBI publishes those crime reports, we see that most will say that violent crime, generally speaking, is on the decline, right? And, of course, it depends on the location, et cetera, and the type of crime, so on and so on. But, violent crime, generally speaking, has declined. Well, one of the reasons it's declined is that people don't have cash on them.
You got it.
And then the crime that has gone up so much is identity theft.
Exactly.
And so, the criminals are adapting to the times, and, the government wants to take credit for the violent crime. Mm-hmm. But at the same time, it's interesting that they've totally militarized police forces. And, the policemen nowadays, they look like soldiers in Iraq. I mean, with the kind of equipment they have and the kind of vehicles they're driving sometimes, what do they need this for? I mean, the population is not, the American citizenry does not have rocket-propelled grenades and, military-style weapons, by and large. That's got to be part of the big conspiracy too, But the thing we have going for us is that nowadays, thank God for podcasting and the internet and the blogosphere, because nowadays everybody. And when I say everybody, it's a figure of speech, of course, but they get it. They understand this. I mean, I remember, Kerry, 10 years ago when I was doing seminars for real estate investors at that time versus today, I would talk about things like the Federal Reserve, fiat money, gold price manipulation, the modern version of organized crime called Wall Street, et cetera, et cetera. I would talk about those things then, and people looked at me like,
rolled their eyes.
Well, sort of. It was sort of two reactions, actually. They either rolled their eyes because they just didn't understand it, or they would look at me like a deer in headlights, like, wow, I never heard this before. But now everybody seems to know this stuff. People are coming around, they get it. And I think a big part of it was Ron Paul's campaign a few years ago, where he wanted to audit the Fed. And people just are starting to realize what an epic scam and repression plan that our government and our central banks around the world and governments around the world are engaged in. And so, I'm not sure which way the scales will tip. People really get this stuff. And once people know something, you can't take that thought out of their mind, at least not yet. Of course, they're working on that too. Mind control and all sorts of interesting things there, but that's a talk for another day. So we'll see which way it all turns, but by and large, I'm pretty optimistic. I think it's a pretty amazing time to be alive, and I think ultimately freedom will win, and free ideas will win, because the cat is out of the bag, so to speak. Yes, the government can inflict more violence than the citizenry can reply with. Sure. we have these draconian laws. We have companies that have privatized prisons that are, by the way, I'm a libertarian, big fan of privatization, but that's one area I don't like to privatize because their disgusting lobbyists are lobbying our politicians saying that they should make stricter laws and bigger sentences so they can basically gain more customers. This is the most disgusting thing ever. The government and the lobbyists are in business against their own citizens. It is tragic and disgusting. Yeah,
they're basically criminalizing more things so they get more customers.
You got it. It's like a hotel.
Wrong.
You just want to fill beds.
Seats and
prison beds,
seats and butts, butts and seats. It's something really nefarious about it. It's evil, and I really so
it is what it is. It is what it is. But hey, one of the things I hope we have time for today is I want to talk to your listeners about real estate prices versus inflation over time, and about how to invest for the three basic economic scenarios. Can we dive into that a little bit?
Absolutely, because that goes hand in hand with what we're talking about with financial repression, negative interest rates, which are probably coming to the good old US of A in some form or another, maybe not overt. And when you have negative interest rates, then you got to go on the march for yield return, which is why all these people got burned, Jason, on junk bonds for energy companies when the price of oil collapsed. They just got slaughtered.
Well, this is so tell us about that. Make that connection for your listeners, if you would, about negative. First of all, how would negative interest rates look in the U.S.? So, in other words, is it possible that, you basically get zero interest now, especially by the time you pay tax. But in the future, do you think it's possible that you might put your money in the bank and they would charge you an interest rate to hold it?
Well, maybe they wouldn't come out and do that, but maybe there'd be a fee. Already, by the time you pay all these
fees, ridiculous bank fees, they really are. We do have negative interest rates because think about it. If you earn 0.5%, which you might be lucky to get, by the way, and then the IRS comes along and taxes you on that 0.5%, so you basically lost 40% of it, depending on where you live, to taxes probably. So now your real interest rate is 0.6%. 0.6%, and then inflation comes along and it'll take that away. But by the time they charge you a bunch of bank fees, $25 here, $35 there, blah, 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 you probably are getting negative interest rates before even taxes, right?
Yeah, and the fees are going up. So you could make an argument, and a pretty persuasive one, that we've already got negative interest rates in the good old US of A.
I think you could. Yeah.
So, and we just don't notice because we're so used to getting screwed and nickeled and dimed by the too big to fails. Right. Some banks like TD Bank are far less onerous with these negative interest rates. So we're not getting as badly, badly hit with them. So some banks aren't as bad. They're more friendly, customer oriented. It's a great bank, TD Bank, if you've ever dealt with them with no formal relationship with them.
Is that part of TD Ameritrade?
They own TD Ameritrade. That's some kind of affiliate type relationship, something like that.
I would also encourage your listeners to check out credit unions. I think credit unions are a pretty good deal most of the time. So
very much so. Very
good stuff. Well, when you look at a chart, and I've got one in front of me, and I'll share this with your listeners as well, so you can put it on your website, Kerry, and they can look at this stuff. But looking at over time, in 1980 to 2010. Okay, a fairly decent chart to look at. You can see that the price of the single-family home versus inflation pretty much tracks inflation fairly closely as measured by the Consumer Price Index, which of course is manipulated by weighting, substitution, and hedonics. But it pretty much tracks fairly closely. So most investors think, I've just got to beat inflation. And real estate investors particularly know that real estate is a very good hedge against inflation, but it doesn't do that well if the real estate is non-leveraged and you're not taking advantage of the multi-dimensional aspects of income property as an investment. Mostly, you'll just do slightly better than inflation over time, not that much better. And it does get out of whack, and you can certainly exploit bubbles where, for example, in 2005, the consumer price index was far lower than the median single-family home price. So there you can exploit it dramatically, and you can exploit those cycles. But overall, over time, your income property will pretty much just slightly beat inflation. That's my thesis.
You're
but
correct.
When you leverage it, then you take, for example, if you're putting 20% down on a property and say the inflation rate is, of course, this is lower than it's really higher than they say, but let's just go with official numbers and say the official rate is 3%. But if you have 20% down, 80% financing, you have a 5-to-1 leverage ratio. And you might think, well, but I'm paying interest on that debt. Well, no, you're not. Because number one, the yield from that property, the cash on cash return, should be, if you're not investing in an overpriced market like California, South Florida, the northeastern areas, and you're investing in good, sensible, linear markets that produce good cash flow, your yield is higher than the interest you're paying, and the inflation rate is probably slightly lower than the interest you're paying. So your debt is being debased by inflation. I call this inflation-induced debt destruction, which is a beautiful hidden wealth creator that most investors don't understand. And you don't have this option in stocks. You certainly have the reverse of it in bonds, so it's really terrible in bonds, or other investments. Income property is very special because it's a multi-dimensional asset class, and we get our return on investment from multiple places. So let's just go back to the leverage-only characteristic. 5-to-1 leverage ratio means you've only got 20% in the deal, but you're controlling 100% and getting the return from 100%. So if the inflation rate is 3%, the appreciation rate is 3%, those are equivalent. But when you leverage it, you really get a 15% return. You multiply that 3 times 5, okay? Because you have a 5-to-1 leverage ratio. So you get to exploit a 12% arbitrage between 3% inflation and 3% increase in the value of the property, but you've got a 15% leveraged return. So that, as they say, is beautiful.
Yeah, it's, especially because of financial repression. And understanding that concept is you're being forced to chase yield.
Yep. And it's so unfair. Financial repression is so unfair, especially to older people, because they did the right thing. They saved money all their life. They delayed gratification. And now they look around and think, I thought I was going to live off my savings and the interest it produces, but it doesn't produce any interest. So now they're going out and they're investing in, like oil junk bonds, as you said, all sorts of Wall Street investments. Wall Street is the modern version of organized crime. And this is part of the transfer of wealth conspiracy. Investors are going out and having to invest in these things, and their wealth is being destroyed because they can't get it in the bank. They can't have a CD. They can't ladder CDs and live off that anymore. They've got to become more risky. They've got to chase more risky investments to get any yield at all. And it's very unfair. It's financial repression.
Right. And people you've lost billions of dollars. Pension funds are buying them. And it's very dangerous when you see junk yields. And those are bonds that don't have an investment grade rating. And that's like triple B plus and above on S&P, I guess, or Moody's. When you see their yields narrowing where they don't yield much more than an investment grade bond, and you know something bad is going to happen in the market when that's occurring, which happened 6 months ago. They were only half a point higher than investment grade debt. And then you see you don't know who's issuing those bonds necessarily. And then all of a sudden you see oil prices collapse. But prior to that, a couple months, you saw the yields spiral higher on those bonds. And then we saw the oil price collapse. And then we found out that it was all these lower and mid-tier oil companies were issuing these bonds. And then they went south. And then it all became very obvious. That's what happened. And hey, at least when you're buying real estate, you got assets, you got inflation protection, and you got debt protection too. So in the final analysis, you as an individual investor have very few ways out of this conundrum. And I have to admit, Jason, when we first met, and this is years ago already, I was a little bit skeptical of your plan here. But now I've seen so many of our listeners, Karen out there and others, and I've met so many people at your event, and people have been with you for over a decade now.
Oh yeah, and we have long-term clients. They become addicted to this. Yeah. It's a good addiction.
But you have to do it according to your rules, which is buying it first and foremost. I feel, and I've been in landlord unfriendly jurisdictions like New York City, New York. And I know how tenants, you're going to get a bad tenant eventually. They can screw you around for years. So, man, down here in Florida, they just eliminated the rule of the second 3-day notice. You get 1 3-day notice now. If you don't respond, man, in less than 30 days, you're out.
As the tenant, you're talking about
as the tenant. Yeah. The landlord gives them 1 3-day notice, and boom, you're out of there. Maybe you can go bankrupt or something and tie up the inevitable, but not for very long.
Yeah. The nice thing about bankruptcy is you can't do it very often.
Yeah.
So that's good. It protects landlords and creditors of other kinds too.
Oh my goodness. We know the stories, and you're going to get a bad one at some point. Some people never do. And all those other rules that you have about valuations so that you're in dull, boring markets. And dull, boring markets have a tendency every now and then to become very undull and very interesting. And then you'll get a really nice return and you go find another dull market. I've watched it, and I'm not talking your book here. I've seen it done. I've talked to people who've worked with you, who've done it. And
well, look, I mean, thank you, by the way, but and I'm so glad you came around. Listeners, Kerry Lutz has come around to real estate investing. That's awesome.
Hey, well, I'm preaching to the choir, I know, but I also know how much money I've lost in riskier investments. The best.
Yeah, we've all tried our other things, so
the best investments I've ever had were in real estate, whether it was my own home in a go-go market, several of them, or buying here in Florida, or apartments. That's where I've made the biggest killing, or my own business. Don't want to underscore that. Can't underscore that enough. If you know what you're doing in your own business and you get a little lucky, that can do it. But then you have to do something with that money. And that's where I've failed in the past myself. But hopefully with what you've taught me and others, I will do better at it now.
The thing is, Kerry, income property is the most historically proven asset class in America. Everybody listening knows somebody, probably many people, who have started with very little and who have created some good wealth for themselves and some good income for themselves with income property investments. And nobody listening, I'll bet you there is not a single person listening who can say they know someone or they themselves have done that in the stock market. Now, there's always a random story, but you have to exclude the insiders. Please don't tell me, oh, well, I know this guy, or I myself started a business and then I took it public and made a bunch of money. That's not an investor. That's an insider. Mm-hmm. That's someone who's profiting from the stock market from the inside. Has an IPO. Or, there's always a random story about, well, I know this guy that trades options and he made some money. But, I just don't know any of those people who've done that over a sustainable period of time. Yet I know thousands of people who have done that with real estate.
Yeah.
I mean, it's just look around your own life. And that's all you have to do is just look at real live examples. And please don't tell me, for God's sakes, don't say, well, Warren Buffett made a lot of money in stocks. Well, you know what? Guess what? In case you haven't noticed, hypocrite Warren Buffett is an insider. He doesn't pay the same price for his stocks that you pay. Okay. So he gets a deal. Mm-hmm. And by the way, I'm going to rag on Warren. I can't stand Warren Buffett. He's become such a leftist hypocrite. It just is disgusting to me.
We won't even get into that, but everyone, but you all know it's true.
I'll just say during absolutely. During the financial crisis, okay, when he was saying, oh, buy Bank of America stock, I did. He didn't pay the same price that we had to pay.
Hardly arm's length transaction there, Jason. Yeah. Everyone knows what you're saying is true. Yeah. And good. And there's just, look, I would have been in it a lot sooner, but my family had some adverse experiences, but they still made money even with the adverse experiences. I took away the wrong lessons because my father really didn't know how to manage property properly. Okay. And you don't buy property in war zones. And he just threw caution to the wind.
Yeah, thank you for that. And just before, I know we got to wrap up, Kerry, but I just want to say, look at if you've heard of a real estate investor who's had a bad experience, certainly you can have a bad experience. This is not a panacea. It's not foolproof. There are problems. I just say it's better than anything else. The real question to ask yourself is compared to what? I mean, what else are you going to do with your investing money? Income property is the most historically proven asset class in America. There are three basic types of properties, A, B, and C. And most of those horror stories you hear are people who invested in C properties and have really bad low-end tenants. And, it depends what type of investor you are, but, people certainly make money in C-class properties and even D-class properties. But for my money, I like the A and the B type properties most of the time. Occasionally I'll delve into C stuff.
C plus is okay.
Yeah, C plus is okay. But understand that property is segmented by area in terms of what Kerry mentioned earlier, landlord friendliness areas. So the other bad experiences you hear are people in places like California or New York or any lefty leaning jurisdiction where they hate landlords. I mean, you go to court and it's the tenant is always right and the landlord is always wrong. Those are mostly the same places that hate big evil employers too. God forbid you should provide a job to anybody, right? That's evil. Yeah. And you get in a dispute with an employee and they take you to court and it's like going to the bank for them.
Let me sum it up really simply, because basically, with a few exceptions, the markets that you follow are in red states, with a few exceptions. Yeah. And if you stay in red states, your capital gets treated better. And,
that's right.
And it's not a blanket rule, requires research, but you follow the people that Jason works with, you're not going to have the problems. And the other thing, Jason, is you don't have to be a rocket scientist to do this. You just have to follow a system. And that's what I didn't get. I'm thinking, because I'm looking in New York, I'm looking in New Jersey, because that's where I grew up. And I'm looking at property that's overpriced, overvalued to start with. And then when you do that, everything has to go your way. And I watched the real estate families keep making more and more money in New York because it keeps on going up and up. And there you really do have to be a Donald Trump type person to make money. But the types of properties we're talking about are the type of properties that Joe Sixpack or better can really do on your own. And that's the beauty of it. That's what I love about what you do, because anybody can do it. And you can be as involved as you want to be or as uninvolved as you want to be. And you're not going to sacrifice much profit either way. That's the great thing.
That's a great point, Kerry. And the one other caution I want to leave your listeners with today is most of those bad experience stories you hear are the result of what I call one-off deals. So one of the big rules that we have in my company is that we don't do one-off deals. Okay. I'm constantly tempted by them, but for the lion's share now, we do have some clients who are in kind of a little elite group that I formed called the Venture Alliance. And in that group, we will do one-off deals because they're bigger, different deals. But our main product is a product where the clients our properties buy, the properties our clients buy, the properties they buy are part of a big relationship that we have with the vendor, who is a vertically integrated property provider. We call them local market specialists, who acquires properties, rehabs and fixes properties up, rents them or makes them rent ready, one or the other, and manages those properties. So this vendor has a long-standing, ongoing relationship that is worth hundreds of thousands, if not over $1 million a year with us. And they're going to take good care of our clients. No one-off deals.
Yeah, really important distinction to be making. Anyway, Jason, best place to find you, connect with your staff? Yeah,
thanks for having me on, Kerry. It was good talking to you as always. My website is jasonhartman.com. That's just my name, JasonHartman.com. JasonHartman.com. Of course, my podcast, my real estate podcast, is the #2 real estate podcast in the world a lot of the time. Of course, those rankings change like every 15 minutes, but it's called The Creating Wealth Show. You can find it on iTunes, Stitcher Radio, SoundCloud, just by searching Jason Hartman.
All right. And hey, as always, you find the link on financialsurvivalnetwork.com. Go there, check out our offerings. They're unique, and you won't be disappointed.
Kerry, I heard you just bought a property today, or you're just about to buy one. So happy investing to you and all your listeners.
All right, Jason, always a pleasure. Thanks so much.
Thank you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.